Welcome to our CFP Exam Prep podcast. Today we're diving deep into the child tax credit, a crucial topic that frequently appears on the CFP exam and often trips up test takers. Let's break down the child tax credit into its core components. The credit provides $2,000 per qualifying child under age 17. Remember that age 17 is a strict cutoff, meaning if a child turns 17 during the tax year, they're no longer eligible for that year. Many test takers miss this detail and incorrectly include 17-year-olds in their calculations. The partially refundable nature of this credit is particularly important. Up to $1,500 of the credit can be refundable, which means taxpayers can receive this amount even if they don't owe any tax. This refundable portion is called the additional child tax credit. Test questions often revolve around calculating the refundable versus non-refundable portions. The phase-out threshold for married filing jointly starts at $400,000, and for single filers, it begins at $200,000. The credit reduces by $50 for each $1,000 of modified adjusted gross income above these thresholds. Here's where candidates often make mistakes. They either apply the wrong phase-out threshold or incorrectly calculate the reduction amount. Let's work through a practical example. Consider a married couple filing jointly with two qualifying children and a modified AGI of $425,000. Their potential credit would be $4,000 for two children. However, since they're $25,000 over the phase-out threshold, we need to reduce the credit by $1,250. That's 25 times $50 for each $1,000 over the threshold. This leaves them with a credit of $2,750. Common exam mistakes include failing to recognize that the credit is per qualifying child, not per taxpayer. Another frequent error is confusing this credit with the Child Independent Care Credit, which is an entirely different tax benefit. When approaching exam questions about the child tax credit, verify these key points. First, confirm the child's age is under 17. Second, check if the taxpayer's income exceeds the phase-out threshold. Third, determine if the credit will be fully utilized based on the taxpayer's tax liability. The exam might present scenarios where you need to determine whether a child qualifies. Remember, the qualifying child must be a U.S. citizen, U.S. national, or U.S. resident alien. They must also have lived with the taxpayer for more than half the year. These residency and citizenship requirements are often embedded in complex scenario-based questions. Here's a pro tip for the exam. When you see a question involving children and taxes, immediately check the ages of all children mentioned. Even if the question doesn't directly ask about the child tax credit, this information might be crucial for determining the correct answer. Remember that tax laws can change, and the CFP exam will test the most current provisions. The child tax credit has seen several modifications in recent years, so make sure you're studying the most current figures and rules. To summarize, focus on the key elements. $2,000 per qualifying child under 17. Phase out starts at $400,000 for married filing jointly. Up to $1,500 can be refundable. And always verify the child's age, residency, and citizenship status. Master these points, and you'll be well prepared for any child tax credit questions on the CFP exam.